Good morning and welcome to Equity Story, 20th of October, Friday, flying solo today. So before I go on, we've got the Equity Story disclaimer in front of you. Everything I talk about today, of course, is going to be all about general and advice and looking at just the stock-specific stuff, which means fundamentals and technicals only. So as per usual, what we're going to go through today, we're going to have a look at what's driving the markets. We're going to go through some announcements. We're going to look at a couple of other things that are making probably headlines and see how we're faring at the moment with some of these announcements for the last couple of days. All right, it hasn't been pretty, of course. So let's move on from your disclaimer screen and let's see where we are going to be looking at. And that is, of course, the summary of yesterday's performance. So you can see S&P down, Dow Jones down, NASDAQ down, Russell down, everything down, 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 down. Now, what is driving this? There's two probably factors right now that are really just weighing heavily on investment sentiment, right? That is obviously the new conflict in Middle East, which talk about inflation being, driving inflation up with this conflict. US is obviously starting to get involved. That's not great. The other part is actually how good the economy in the US is actually going. So we had Powell yesterday speak and talking about that. Yeah, I think they're going to have to go press those further interest rate rises button. So that's the two things that are driving the current sentiment in the market. That's why the markets are dropping down, and that's why the yields are going up. It's simple as that. So what does it actually mean? I mean, the only good thing, I suppose, is that gold is going pretty well, which, again, we'll have a look at for you in a second. But what else is happening? So you can see the sectors were pretty bad. Really nothing to get excited about. I mean, some of the good stuff did okay, like Microsoft, I think, was up. A couple of other stocks were up, but generally speaking, it hasn't been great. So from the stocks specific wise, you've got Tesla was down heavily, about 10%. That looks pretty poor. Netflix was up. That was the good one out of there. As you can see, the earnings. So it's been a good start. Yes, last time it was mixed, but it has been a good start for the reporting season. So that's decent. And like I said, Powell here talking about the strength of the US economy, which means possibly, first of all, rates will be steady, but there's a growing chance of interest rate rises, which is not great, of course, for the investors out there who are wanting to see interest rates come down, of course, right? Anyway, there's nothing we can do about that at the moment. So what we'll do, let's flick onto the commodities. Let's see what's going on there. And really, the good news is gold, and the good news is oil, right? You've got 93 now, 90, 93, and let's have a look at gold, 1976. So I'll show you the charts in a second of those two, but that's where the hope is. I'm just going to have a quick look at lithium, which is a little bit up this week, 4.8%, which is nice to see. Iron ore is down. No, it's actually up for this week, 2%. But the rest of it has been fairly not too interested. And I think I did see maybe uranium starting to inch back up again. So maybe that's something we can look for next week. All right, what else is happening? So let's flick through to, actually, before I do that, before we look at some of these charts, I want to quickly go through the FN Arena stuff, because there has been some officially announcement last night. I just wanted to see what the brokers are saying. So first one's Tilix. So let's have a look at what's happening within this. I'll read these things out to you. So I'm going to go through some of these companies and where they're actually at with some of these big brokers, right? So I am going to actually flick the screen so you guys can see that. So we'll go straight through there, and I will put in. Let's start with Tilix. Whoops. Let's start with Tilix first, and then we can see where we are. All right. So Tilix. Okay, yesterday we talked about it. I thought it was just really ridiculous overreaction to a story that's actually doing quite well. There's just little understanding exactly what's expected. It's still very new to the revenue side of things, to commercializing its products, right? So for me, it's still finding its feet in a way. Tilix, I think there's a huge upside to Tilix, but at the moment it's very volatile. And last night's 11% rise in revenues obviously wasn't good enough for the market. They obviously saw something else in there they didn't like. However, if you look at the commentary And like I said, I mean, probably the reasons why they didn't like it is maybe just lack of understanding exactly what's expecting out of Tilix. But anyway, I'll go through and I'll just read it out to you what one of the brokers is saying that's come out with its report or update. Is Tilix reported 11% quarter-on-quarter revenue growth in the third quarter, with revenue for the period totaling 133 million. The result was ahead of Bell Potter's expectations to the tune of 3 million. So they've actually, on the revenue side, outperformed what the expectations were for Bell Potter. So it's interesting to see how the market's really taken it negatively. There may be a bigger broker in there that maybe missed expectations on that side of things, but you can see how strong some of these moves can be if you maybe miss expectations. On this side, reading through what Bell Potter said, nothing negative really, except maybe I think they're talking about a 5.6 million increase in research and development spend. Really? I mean, it's actually good that they're spending R&D money. I'd rather them spend there than spend it on corporate, right? So that's actually very, very, very good in a way. Of course, you don't want to see it just jump out too much, but on 133 million revenues on a quarter, 5% is not a big outlay increase, right? So that's really clutching at straws to me. Saying that, there could be something else we just don't know yet. So anyway, Bell Potter's left at $14, so they haven't moved their price target. So look, I'm expecting maybe with time Tilix recovering once the market understands how the story goes. There might be a possible time where we're going to look at this again, but I think how we trade, how we invest with the CTM, if you're a trader, you got to be out. If you're maybe long-term investor, if you look at it on a monthly basis, you're probably still in, right? But you got to probably stick to one of these lines, whether 871 or 650, whatever you bought it at. If you bought it of that, you stick to it. But if you bought it on the weekly, you can't then go back and say, oh, well, I might as well keep it down to $6.50. It just doesn't work that way. Anyway, I'm not here to obviously preach what you should do, but just saying, technically speaking, that's broken trend. Trading wise, that's a sell. Long term, if you look at using monthly, you're still a hold. Long term, if you're using weeklies, you got to get out. Simple. All right. Let's move on to some other updates from stories. So I'll quickly put this on. Let me see what else I can find in here. So CTD, right? We talked about it yesterday. Let's have a look what the brokers are saying there. So the overweight for one of the bigger brokers, price target of $29. So that's a massive difference between the two. They're obviously happy with what they're seeing. It's actually trading fairly inexpensively at 15 times, according to the big broker here. So it's interesting to see how the market's really negative on CTD. But the market at the moment is negative of everything pretty much. It doesn't matter. It's just throwing everything out with a bathwater right now. So it's just hard to actually understand where some stocks stand, because there is just no consistency with the markets right now. It's you sell, doesn't matter how good you are, maybe coming up with an announcement, or maybe how bad you are. It's just there's just really strange movements and actions, and we are just at the mercy of the traders out there, because there's probably, to be honest, there's probably a lot of investors sitting on the sidelines. So the market's been probably pushed around for the day traders, and they really don't know what they're doing. I mean, we know that the day traders usually don't got no experience what they do, because the history suggests that they can't even last 5 years, right, in the industry. So they really are looking for a quick buck at the end of the day. That's what a day trader is, right? So anyway, but that's what we're at the mercy of right now. It's not an easy market to actually play around with. But you can see it's just volatile. A lot of these stories, right? You've got CTD below trend, so you cannot buy it. All right, let's move on to some other stories. What else I can see in here? I mean, I'm not even going to look at because we know it's down, but the brokers still buy on it. And probably, maybe right now, obviously, you wouldn't buy it, but interesting to see. Net wealth is a sell from another big broker. So let's have a look at that one after yesterday's update. You can see that's another sell technically, and fundamentally probably be sticking to Hub instead. What else? So we talked about that oil was the good one. Right now, if you're going to be playing anything at all in the short term, you are playing with gold and you're playing probably with oil. And look at that. That's actually nice, but there's actually a buy signal on Santos. That $8 is a big worry, right? You can see it's a beautiful setup here for next week. So if you're looking at anything, Santos, I'm actually going to write this down because this is one of the better stocks I've seen. So that's looking great. Let's look at WDS as well, just to see exactly where it's at. But Santos, after yesterday's update, there's a buy, there's an overweight from two brokers. One's got a price target of 9, the other one's got 8.88. So you've got $1 in it from them point of view. Anyway, Woodside's working itself back up again as well. That's, nice looking. Probably needs a little bit more to be done. Santos Mudbird looking chart, but it's looking interesting, isn't it? So from that point of view, I don't mind it at all. And last one, Worley. Let's have a look at Worley because they've also come up with an update today. They had the AGM. So let's have a look at Worley, where they are at. And again, you can probably classify it as a oil and gas stock. Still above trend, still a hold technically, still a hold fundamentally. And, long-term thinking, it still makes sense, I suppose. It is a contractor, but it's a big contractor. It's a global contractor, big projects. As long as they can keep in check their costs, I think it's a decent company. So anyway, overall, it's not bad. Last one, let's have a look, is Whitehaven Coal, WHC. This is from FN Arena again. Just going through some of these updates on the brokers side of things just to see exactly where they are. So they've got a sell on it. It's just pretty much a function of the price, because the price target is $7 and it's at 7.34 at the moment. So this obviously, I think, a little bit expensive. Anyway, that's the updates there. So let's look at some of these company announcements, right? So from yesterday, NCK, and again, I'm just looking through AGMs and looking through, the first few months updates that the company's come up with. Yes, there was a fairly positive reaction to Nick Scali due to the fact that the update wasn't great, but it's better than market expects. So this is why the market's a little bit difficult when you've got a company that reports fairly weakish, but better than expectations. So it's not bad. It's still holding good dividend play. But right now, would you be in this in a retail space when you've got these interest rates high? You've also got inflation possibly still, very tough. Yeah, you probably wouldn't, I'd say. You probably wouldn't. So that's why, even though Nick Scali is not bad, and, maybe you can keep it for a dividend, it's difficult to make a case for it, unfortunately. Because if I'm going to actually go into like a dividend play, I want to have a positive environment to go into a dividend play. So at least give me a sector that's positive. Maybe like I don't know, gold or something, if I can find one in there. Anyway, let's have a look at another big story. Another one that's come up yesterday with reiterating its guidance really at the end of the day, but the markets just doesn't like that big acquisition that they've made right there, right? It's just really, like I've said, any big acquisition, especially, they are effectively doubling in size in the acquisition out of Europe. And it's a risky acquisition, of course, but look at the sentiment it's put on this story. It's just completely turned negative. Now it's looking lower. It's looking like it's going down. So you could not be in this at all. And when you look at it, it looks attractive now from a fundamental point of view, from valuation, but you cannot touch it on technicals at all. So you got to wait until it sort of stops, maybe starts to turn, and then you look at it again. But right now, the update AGM was decent. There's nothing in there you get scared about, except of course the big acquisition. But other than that, they remarkably doing fairly well in a difficult environment. All right, let's look at LTR. So they had a really big capital raising after Albemarle's pulled out. Not surprisingly, huge discount, absolutely huge discount to the last price, 185. Down she goes. I think the only thing you can say is expected, really. It was propped up by this Albemarle thing. Everything lithium-wise is coming down. This hasn't come down for some reason, right? So it doesn't matter if Albemarle put in $3. You just had a feeling they're going to pull out because things have changed. Since the first bid they put in, lithium prices have come down significantly. So their valuations are not as crazy as they used to be. So, thinking about it, it was never going to put in $3 bid. Never in a million years. They'd be silly. They'd be overpaying by a country mile, right? So they had to pull out. They did. So they're going on their own. They're going to start, trying to obviously build this mine and come through with cash flows themselves. They've got still Gina on board. But, unexpectedly, it's come down to where it probably should be, 185, maybe even lower. I mean, it's still lots of risk with, developing the mine and getting the cash flows going. But if you're a shareholder, don't be surprised, because that's exactly what you expected. It's simple. All right, let's go to the next one. Powell. So right now you'll be, if you're a trader, you're definitely out. Powell. So we talked about polymetals, right? This is the Endeavour mine, the zinc, silver mine in New South Wales. Look, it's still, if they can make this work, I know I talked about it. I didn't like that update that they come out yesterday, because they were looking at higher prices, spot prices than the current prices. So they're obviously hoping for a bit of a miracle happening over the next 12, 24 months. But if they can pull this off, right, if they can somehow pull this off and the prices do go up to whatever they come up with that study, market cap of 50 million right now, this could double, triple, right? You can see this at 150 million if they're a producer. And it's actually cash flow positive producer and actually making money, right? You can see that happening. You can see them tripling from here if they think. But this is the problem with this industry. You're aligned on things out of your control, like the prices of commodities. So while it's still technically a hold and fundamentally still okay, there's a lot of moving parts, risky parts that potentially might not play for them. So yeah, you've got to make a choice here whether you're still in this or not. Especially that's hope that the prices will be higher in the future. All right, let's go to the next one, BSL. Now, this is a very interesting one, right? So we've got BSL today come up with a downgrade, right? It's obviously below trend now. You've got to be out, technically speaking. You look at the daily, it's actually daily, you're up 10 cents today. Is that right? On a downgrade. I mean, that's just unfathomable. But anyway, it's actually down for the day, for the week. It's pretty bad. So look, downgrades, you always want to get out of downgrades. So it's just simple as that. Fundamentally, downgrades are exit points. You should have been out anyway, technically, probably 2 weeks ago. But that's just, again, a reflection of current markets, steel production and so on. It's just difficult. And BSL is one of the good companies on ASX that can give us a bit of a look through to see where we might be heading. And like I said, the RBAs and the Fed's going, it's still a strong economy, but trust me, we're getting worse. It's coming back. You can see China's not going well at all. You can see downgrades from BSLs. That's a really good indicator of what's actually happening, the real thing, what's actually happening. So just give it a bit more time, and you'll see things come down. Okay, next one. Let's look at NEU. So they've come out with an update, just like Telix, they've come up with an update. Let's see how the market's taking this. And the market's actually taking this positively, which is nice to see. So, it's holding on quite well for the week, and they've got some good, decent revenue. So this one's holding the trend. If you're in this, you're still holding technically. Is it better than Telix? I don't think so for me. I still prefer Telix as my play, but I'll probably have to be out by Telix by the end of the day unless some miracle happens, of course. But that's just the way the cookie crumbles. Sometimes you've got to take the bads and move on, learn from it, and see how you go next time around. Anyway, I expect things to get better for Telix anyway, and the markets generally speaking later down the track. All right, so let's look at a gold play. Let's look at a couple of gold plays. Let's look at CMM. And they've got a very nice chart, a very nice set of results today as well. So look at this. This is looking actually very good. So if you're going to be playing, like I said, gold is probably the right spot. Let's look at EVN as well. It's also looking very good, right? You can see it's now coming back up beautifully. look at the gold chart. That's looking really, really good, right? So if you put that on, look at that. That is looking fantastic, right? It's just, again, needs to crack through that 2000. We've seen this before, try, but it failed. So there's a number of stories you can probably play on the gold space. So EMI is another one you can probably play from that. So let's have a look at that. That is a great looking chart for EMR, up 13% for this week. What else is there? NST, right? Another decent story in the space. Yeah, look at that. That looking very, very good too. A couple of others where we looked at recently. MAU, let's have a look at that. Magnetic. And look at that. That is the buy of the week almost, isn't it? Whoa, wow. This is a good looking chart, 24% up for the week. Ooh, yeah, okay, I've got to write this down as well. This looks very, very good as one of the better plays on the charts. Anyway, guys, obviously you're going to be joining me for the Fridays ATA, aren't you, at 12 o'clock? So I'm going to see you there. But let's look at the last one. So obviously we'll talk gold stocks on there as well. Linus, right? Let's finish on Linus on this, and that doesn't look great. Again, function of the markets, inventories are high for companies that have got rare earths because there's a slowdown in economies. Even though maybe some of the numbers are saying otherwise, there is a slowdown, and just give it a few more weeks, a few more months, you'll see everything come down. Trust me, there's too many negatives. There's too many things that are going on globally for people to be gung-ho and spending money. I mean, I'm one of those that obviously putting my spending back, and I'm probably an average Joe really when it comes to doing things. So whenever I see myself doing stuff, I'm thinking this is what's probably that's happening in the real world. All right, so what's the positives? Let's have a look at today markets and some of my watch list numbers. So let's have a look. So is there anything positive in our universe? And I've got a lot of stuff going on, of course, here. Really not much, isn't it? You're looking through. So Lindsay is the only one that we still follow. Really liking this ASG. Look at that. Really liking this ASG. That's looking like a great chart. It's actually buy signal. Another one, I'm going to write this down. You can have a look at the end of the day. And apart from that, fairly quiet. Okay, Bellevue Gold. Let's have a look at another one, another gold. Yeah, that's still looking good. Look at that. That's something probably to have a look at. While we're at it, let's look at DEG. DEG. Yeah, no, not quite. Still needs to do more. All right, let's go to the negatives. I don't like to look at the negatives at all times. But anyhow, I have to. Let's see what's going on there. So you can see Satire is not looking great. Tilix is not looking great in there as well. Down another 5% today. But Satire is looking really strangely poor after that really strong update yesterday. Again, the markets, isn't it? It just doesn't take any prisoners at the moment. Light 360 looking down as well here. But still holding. Drop Suites. Yeah, it's fluctuating up and down. Had a good day, then a bad day. Let's look at Chrysos, the one I was raving about last week. It's still decent, still a gold play, remember? So I just need an update from them. Maybe next week, and maybe we can see that return back to its highs. But I'm still holding it, of course. This is still a very strong chart. Nothing wrong with that. Anyway, I'll leave it at that. I think we've talked enough today about it. It's still a very negative market. I think the market's down. Let's have a look. 80 points, another 1%. So let's just have a look at XJO just to finish it off on a really downer, right? Because we just don't have enough of that. Look at that. That's just looking very poor. 6,900. That is very, very poor. That's looking like if it breaks that, there's nothing else holding us that to go down to probably 6,700, maybe another 100 points, 200 points. The things we have to work through, don't we? All right, guys, I'll see you in a couple of hours. Actually, no, see you in an hour, 1.5 hours to be precise. Have a great weekend. If I don't see you, cheers. Thank you.